Welcome back to Market Minute. TCS has announced its Q1 result. Let us try to analyze and understand the numbers. TCS beats the street estimates, which is a positive sign, and its Q1 profit comes at 11,074 crores. If you see the year-on-year growth in the profit, it comes at 17% up, and the revenue has grown by 13% year-on-year. But when we see on a sequential basis, it means when we compare with the last quarter, the revenue just increased 0.37%, and it is the slowest growth in the last 12 quarters. And the quarter-on-quarter profit, it declined 3%. And when we see the constant currency revenue growth year-on-year, comes at just 7% increase. So what is a constant currency? So when we see the IT companies earns in a dollar, and when it is converted into our local currency, there is an exchange rate fluctuation which may exaggerate the earning. So to understand the actual revenue, it is advised to see the constant currency growth, and which comes at the actual 7% instead of comparing with the overall revenue growth 13%. On top of it, when we look at the operating profit margin, it comes at 23.2%, and which is considered to be down of 130 basis point from the previous quarter. The reason for this margin contraction is because of wage hike and the increments that they have given to their employees. Also, we can see the downtrend in the attrition, and last quarter it was 20.1%, and in this quarter Q1 it stands at 17.8%, which is a positive sign, as they don't need to spend a lot of money in hiring, and they're able to retain the employees. And moreover, the job market is also dry, and because of that reason employees are not switching the job. These are the reason for the attrition level to come down. And if we see as the vertical growth, how it has performed, and we can see the clear slowdown in the BFSI vertical, as there are a lot of bankrupt happen in the month of January, February in US, and the clients are reprioritizing the spending, and because of that, especially BFSI sector is quite slowing down. And if we see the life science and healthcare vertical, it has seen a growth on double digit, which is 10%. And coming to the market-wise, the North America grew 5%, and the Europe continent grew at 3.4%, and the UK market grew at 16% growth. And if you see the emerging market, it also grown at double digit. So these are the overall point you have to understand if you are an investor in TCS. Also, TCS has announced interim dividend of 9 rupees per equity share. Takeaways from this video: if you see, the result of the TCS is quite mixed, and if you see on a year-on-year basis, they have performed a bit, but if you see on a sequential basis, comparing the current quarter with the last quarter, their profits are declining and revenues are in a downtrend. So considering this, we can expect it might be like, in the coming quarters, they might be at, giving a poor result, and because of that, the stock price might be in a pressure, and which we have to wait and watch. And there is a possibility for the stock price to go down. So in that case, you can consider buying it if it comes at a very good discount level at that point. When you do a comparison, to keep in mind that there is a lot of disruption happening in the IT industry, like AI, artificial intelligence, and if you see ChatGPT, which is like, trend, and how this is going to impact the IT industry is yet to be known. So these things you have to keep in mind. And apart from that, there is clients are reprioritizing the project, and they are renegotiating the contracts. Because of that, there will be a margin contraction, and the profit may fall. So these are the reasons before you have to keep in mind before investing in any IT industries in India, because as they are mostly outsourced companies. And when you compare it, usually you just compare with the current PE, with the historical PE, as well as the industry PE. And if it comes at a better discount, and if you see they are investing heavily artificial intelligence, trying to work on like a Chinese market, BFC sector especially, because they have a huge exposure in the revenue in terms of revenue to the BFSI vertical. So if these all started showing some positive trend, then obviously you can consider buying the IT stock. And till then you can wait, or you can start accumulating at a better price range. Thanks for watching the video till the end, and do like and share so it reaches the maximum audience. Thank you.